Welcome to Take 5 Tax Tips with Kelly. Action. Our specialty here at Ross Professional Corporation is working with members of the arts and entertainment industry. In Toronto, we've established ourselves to be the go-to accountants for those in the arts and entertainment industry. This video is focused on the specific income and expense related items to think about when it comes to being an artist or entertainer. Let's start with expenses. Well, first and foremost, before we can even get into that, we have to figure out, are you a T4 employee or are you self-employed? If you're a T4 employee, you really are limited to what it is that you can deduct, and there's really not much you can. And you definitely can't do it if they're not going to issue you a T2200. So step one is to ask the employer if they're going to be issuing you that, so you know whether or not to be saving those receipts and tracking those expenses. Now, let's say they do give that to you. What types of things can you deduct? Well, it comes down to what it is that they're checking off on that T2200. And for each individual, it's going to be something different. You could be able to deduct things like your materials and supplies. You could be able to do home office. You could be able to do travel expenses, your vehicle. Again, it comes down to which things it is that they check those boxes for, and they don't check off that they are reimbursing you for them. Because if they are, then again, obviously you can't double dip because you're already getting reimbursed for those specific items. Now, what if you're not a T4 employee and you're self-employed? Well, this is where you can reference the other video that we talked about before, where we were going through all the different expense types that you can do, where we were referencing the tax packages on page 9 and 10. Please refer to that for some further deductions. What I am going to discuss though today are the specific expenses to artists and entertainers that not every other industry can deduct. Let's talk about stage makeup and hair, for example. These are not expenses that any other industry can deduct because you're the one who's going to be on camera and you're the one who's going to need to do makeup and hair, and it's not an option. It's a necessity. It's something you have to get done. Just make sure you're not making any deductions for times that you're not on camera, for example, because those will not be deductible and they would fall into the category of the other industries as well and would be considered personal expenses. Same thing goes for your business wardrobe. So if you have to purchase any items in order to be on camera or to do the auditions, those are items you can deduct too. Now, what if you're not on camera and you're off-camera crew? Well, there are still things you can deduct. You can't go doing any makeup and hair because you're not on camera, but what you can do is some of your wardrobe. Not the clothes themselves, but your inclement weather stuff. So if you have to buy hats, gloves, jackets, anything to keep yourself warm while you're out there on set in the inclement weather, you need to be able to deduct those too. Now let's talk about something else that's for the artists and entertainers too. Let's not forget that your industry requires you to do some research and review of other people doing roles that you're going to be doing. So you're going to need to have things like your subscriptions to Netflix, could be Disney Channel, could be whatever it is that you need to be streaming so you can review different items. This is something that's going to be a deduction for you. But let's not forget there are other members of your household as well. And we need to factor them into some of the charges that you're incurring because they're using these streaming services too. So you need to figure out what relative percentage would be for what it is that you're using for business purposes to take those deductions in those items. Those are really the very specific items to your industry that most people can't deduct. Now let's talk about income. This is where I find a lot of people get confused understanding the difference between net income and cash received and gross income. So just because you're receiving a certain amount of cash into your bank account for whatever part you were doing does not necessarily mean that was the actual income that you need to declare as your gross income. And what I mean by this is, especially if you're working for unions or agents and they're funneling the money through for you, some of this stuff already has stuff taken off the top. So let's talk about one of the things that I see very often is what's considered this 12% is what we talk about around here, the 12% gross up of the income. These are your taxable benefits that are getting routed somewhere else for you, but they're part of your income. You're just not seeing the cash come into your pocket. These are things that are going towards RSP contributions, could be going towards your insurance plans. It could be some other types of withholdings that are coming through to do with your benefits. So you'd want to make sure that you're including those in your income amount. How you can tell this usually the best is by taking a look at a timesheet. On your timesheets for any of this work that you're doing, you will see a gross income number and you'll also see a net pay number. This is where you're going to see a really big difference, and you'll see where the deductions are. Now you may say, how is that fair? If I'm not receiving all of that money, why am I getting taxed on it? Well, let's think about the RSP piece. So if they're contributing the RSP on your behalf, most likely you're going to be receiving a contribution slip for your RSP. You'll be getting that RSP contribution slip, deducting it on your personal tax side, and it's going to completely offset that income, so you're not going to be paying tax on it in a year. Where some people get tripped up, and I've seen this happen before, is that they're double dipping. And what I mean by that is they're providing their income numbers to accountants as their net pay number, and then they're also using that RSP contribution slip as another deduction. If CRA gets wind of you doing any of these things, and it would be totally erroneous, I'm not saying anybody would go intentionally out to do that, this is where you could end up into trouble, and you don't want to end up at a later date and time after an audit having to go and have it to repay the government and have interest and penalties on that. And then you're also going to be on their watch list, and that's not something you ever want to do. So it's better to nip it in the bud right from the beginning, take a look at where your gross income number really needs to be, and make sure you're reporting that properly. And don't forget to take the deduction on the other side. Don't forget to use those RSP contribution slips to offset. Don't forget to take a tax deduction for any of your health benefits that are going elsewhere as well, because that'll offset and reduce that income amount too on the other side. Here in Toronto, we are your accountants for the arts and entertainment industry. Subscribe to our channel for more Take 5 tax tips with Kelly. That's a wrap, folks.